What's up, my Mind Your Money business folks? It's me yet again with another video on today's stock market news. And as always, hopefully you're in the market and not trying to time the market because that is simply impossible to do. And as always, hopefully you're not straddling the fence and you are investing into appreciating assets that will grow over time the longer you leave them in place. So the stock market closed a few minutes ago. And the news is saying the Dow slides, S&P 500 and NASDAQ snap winning streak as Oracle leads tech stocks lower. So what happened to Oracle? I had to turn that off. Oh, so it says here U.S. stocks slipped from their latest record-setting run on Tuesday as Wall Street weighed worries over the government's shutdown against hopes for artificial intelligence. This is good. So the Dow Jones fell 0.2%, the S&P 500 dropped 0.4%, and the NASDAQ decreased roughly 0.7% after fresh record closes on Wall Street. So gold futures topped $4,000 per ounce for the first time ever as investors continue to flock to the safe haven asset. I don't invest in gold, but I'm thinking I should be. It's another place to park your money. Gold has always been safe. So the pullback in stocks comes after the S&P and the NASDAQ both scored their 7th win in a row on Monday, boosted by news of a multi-billion-dollar deal between AMD and OpenAI that sent the chip company's stock rocketing higher. But the AI trade lost some steam Tuesday, led by a decline in Oracle stock after a report said the profit margin in its cloud computing business was likely lower than many Wall Street forecasts. Shares of Oracle fell as much as 7% throughout the day, but closed 2% lower. Tesla shares also lost steam, dropping 4% after the EV maker unveiled a cheaper Model Y priced under $40,000. That's actually pretty good. On Tuesday, in a launch initially teased in a series of cryptic social media posts. So that's interesting. So the stock price dropped because they introduced a cheaper model. Hey, investors. The fact that it's saving people money, investors took money out. It's like, why do they want people to be broke? Interesting. That's why you need to be investing and ensuring that your money is growing to outpace inflation. And inflation means the prices of goods and services are higher and they will continue to grow. Look at how much people are paying for rent now. Look at how much housing prices are now. The prices of everything is going to go up. So you need to beat that, and you can beat that by investing and owning assets that appreciate over time. So earnings results would take on even greater prominence than usual for markets during the U.S. government shutdown. The longer the federal stoppage drags on, the more clouded the picture of the economy will become for investors as key data releases dry up, making it hard to divine the path of interest rates. So that's true. If these reports aren't coming out and people can't speculate what the interest rates are going to do, what's going to happen in the market? I don't know. I mean, we're all affected. Well, I'm affected by the federal government shutdown. I work for the government, but I still have to go into work. Even though I'm not being paid, I still have to go to work. Let's see what happens. That's why, I know I talk a lot. That's why you need to be debt free. That's why you need to have an emergency fund. So when things like this happen, you're not worried. I'm not worried. I have money set aside. When my rent's due, my rent's going to be paid. When I need to put gas in my car, I can pay cash. I can put gas in my car. When my utilities are due, I have a debit card. I have the cash to do that. And you do that by creating your emergency fund. And the only way that you can free up a lot of that cash is by being out of debt. and having that plan in place. You need to be planning. If you haven't realized it by now, people, you need to have a plan. We're just not taught that plan in school. We're taught our ABCs, we're taught history, but we're not taught how to structure our lives. Maybe that's what we need to have in school. A class called Structuring of a Life, how to prepare for life after school. Humanities or something. Anyways, back to the article. That's not much. It says it has already delayed the September jobs report that was due Friday. So the shutdown has delayed that, right? So next week's releases on consumer and producer inflation, crucial to the Federal Reserve's decision making, could also be postponed. And so if those things are postponed, then will there be a rate cut? Probably not. Right? I don't know. Anyway, meanwhile, a potential crack in the Washington gridlock on a funding bill emerged after President Trump signaled he was open to negotiating with Democrats over the health care subsidies they want to extend. Trump amped up his threats toward federal workers. However, yeah, that's it. And the article abruptly ends right there after the word however. Yeah, that's it. So let's see what the stocks did today. Ooh. Tesla took a nice little hit today, losing $20.16 today, closing out at $433.09. Broadcom gained 92 cents today, closing out at $336.41. Palantir gained $2.64 today, closing out at $182.17. Nvidia lost 47 cents today, closing out at $185.04. FTEC, Information Technology ETF, lost $2.21 today, closing out at $224.77. SPLG, S&P 500 ETF, lost 30 cents today, closing out at $78.71. Meta lost $2.58 today, closing out at $713.08. And that's pretty much it. And like I always say and have been saying throughout this video, you need to get out of debt, people. You need to get out of debt. You're working hard. Why are you in so much debt? You need to start living below your means. You can live very comfortably below your means if you have a plan in place. It doesn't mean you have to sit there and suffer every day, but live smartly. Live below your means. You don't have to buy that brand new car, buy a used car, buy with cash. You don't have to go out right now and buy a home. Continue to rent. You don't have to live in the fanciest neighborhood. Find someplace safe and decent. You don't need to be wearing the latest designer clothes because someone you worship on the internet is wearing them. They're probably being paid by the sponsor of those clothes or the maker of those clothes to wear them and to advertise them on social media. They didn't pay for it. So don't you go out and pay for it. Wear the knockoff version. Keep going to Target. They have good clothes, right? Ross. Anyway, just live below your means, people. Get out of debt. And the only way that you can get out of debt is by creating a plan, and that plan is called a budget. If you need help with creating one, let me know. Hit your boy up. I'll help you out. Continue to learn. I was having a conversation with someone earlier. That's why this video is, well, anyway, about technology and how it's going to change the world. I'm having conversations with ChatGPT every day, learning more about that. Technology is going to change. It's already changing the world, and it will continue to change the world. And they're saying by the year 2030, a lot of changes will be made. And you need to be prepared for that change. And you can do so by getting out of debt, by investing, and being aware of what's happening around you. So I'm going to end this video. So like, comment, subscribe, share this video. Let me know what you think. If you think anything at all, just remember to think, people. Think. I wrote something down, but I didn't bring it home with me. It was about what Albert Einstein had said. Maybe I'll remember later. Anyway, you need to think, people. Think your way out of the struggle that you have placed yourself in or you find yourself in. Think about how to get out of it, and you can do so. Disclaimer, I'm not a financial advisor, nor am I pretending to be one. So any and all information on my channel is for entertainment purposes only and expresses simply my opinion. So please consult with a financial advisor before you invest any of your hard-earned money. So, all right, so you guys take care. Have a blessed day. Peace.